So my biggest question around your plan is, haven't we already tried that? I mean, we did that a few months ago. It devastated the economy, worked a little bit for the virus, but then didn't crush it, and numbers kept rising again. Why would we want to do that again?
Well, you're right. We did a partial approach of this in the spring, but we gave up far too soon, and it was not nearly strict enough. You know, we've looked at research that says around 38 or 39% of workers in America are in essential industries. But the shutdowns were very varied. Here in Minnesota, 78% of workers were deemed essential. So it was a very partial shutdown, and then we gave up far too soon. And as a result of it, the virus is now raging almost out of control across the country with 50,000 cases a day. We have this very muted, uneven economic recovery. As you know, college football is being deferred. What kind of recovery is that? When we look at other countries who had much more aggressive shutdowns and then more gradually reopening with the health professionals in the lead, their economies are recovering much more quickly now. So we blew it the first time, and Dr. Osterholm and I are arguing we should do it right this time.
Not sure. Do we really have that second chance where we can do that to our economy? We're already seeing miles-long food lines at some food banks across the country. Small businesses are shutting down. Thousands. I mean, you know, at the Fed, you guys speak to these people. The millions of Americans are unemployed. Wouldn't that cause permanent damage to do that again?
Well, look at the alternative. Unfortunately, where we are right now, we've given up controlling the virus. And so we can have a very rocky, muted economic recovery for the next couple of years until I hope a miraculous vaccine will bail us out of this. Or we could try to take more aggressive temporary measures now so we can have a more robust recovery. Imagine for a moment if we had actually done it right in the spring. Right now, we would have college football. Right now, the school districts across the country would be welcoming their students back into in-person learning again. And we'd have to monitor. You know, you shut down, you don't completely extinguish the virus, but you drive the case count down enough so that the public health officials can contact trace, can test, and can manage any potential flare-ups. We've given up that right now because the virus is raging out of control. I wish there was an easy answer. We've got a bunch of tough choices to make.
In the meantime, we have a lot of economic pain out there, and we don't have a stimulus deal from Washington, as Eamon just reported. No negotiations even happening. What's the impact on our economy of not having another relief bill?
Well, it's profound. I mean, the best thing that has happened in this terrible crisis has been the way that both parties have come together in Congress to provide a lot of assistance to the American people who've been laid off and to businesses who've been directly affected. And they need continuing support until we get through this. You know, by the way, if we don't arrest the virus, and this is going to be burning for the next year or two, people are going to need support for the next year or two. If we were to do an aggressive intervention now, the bridge that they would need would be much shorter, and it would actually be more affordable than having to provide assistance for the next couple of years. But it is very important that Congress continues to provide support, especially to those workers who continue to be unemployed.
Hi, Neil. Speaking of Congress, some House Democrats are proposing expanding the Fed's mandate to include closing racial gaps in jobs, wealth, and income. I wonder, can you see a way that that's practically workable for the Fed? And do you envision any unintended consequences if the mandate were to expand in that way?
Well, we have the dual mandate, which I know you talk about quite a bit, which is both stable prices and maximum employment. And we can think of those things as like a seesaw, that sometimes we're trading them off of each other. I think we'd have to look very carefully at if you did try to use monetary policy, which is a very blunt tool, to close wealth gaps or employment gaps of different races, what would happen on the inflation side of the equation? I mean, one mistake that I've been vocal about for the last 5 years is we raised rates prematurely before we had really achieved maximum or full employment, and that put a damper on the labor market. Well, I think we're learning from that experience, and we want the labor market to strengthen as much as possible. And that, when the labor market strengthens, it brings everybody in. It really helps everybody to succeed. And so I'm comfortable that we have the tools within our dual mandate. I am cautious about what it would mean for inflation if we change that and just focused on one group or on gaps directly.
Is there a way to study that then, do you think, and provide feedback on that before the request or command comes down one way or the other?
Absolutely. And in fact, at the Minneapolis Fed, we have a research center called the Opportunity and Inclusive Growth Institute, whose mission is to study these different gaps. What are the causes of the gaps, and what are the policy levers that could close the gaps? Potentially monetary policy, but certainly fiscal policy probably has a much bigger role to play. We should be studying them. We should bring all of the resources we have to bear, but we need to be cognizant of potential trade-offs.